Hello everyone, welcome back to the channel Mastering Options Trading. Uh, Quick disclaimer, I'm not a SEBI registered analyst, so please consult your financial advisor before taking any of the trades. Today, I have got a very interesting video. I think this is very uncommon and not structured anywhere on YouTube or Google or anywhere. So basically, what I am trying to do is to uh, give you some tips or information based on my own experience. Okay, the series name is called uh, the stop loss. How to decide a stop loss, right? So for this reason, what I've done is basically I'll explain you five different ways majorly used for deciding upon a stop loss. Okay, the first one is based on spot price. Second is based on indicator. Third is based on premium. Fourth is based on risk reward, and fifth is based on strategy. Okay, before I go ahead, I hope today onwards my audio quality will be good. Please do like, share, and subscribe if you find my content useful, right? So, quickly jumping on to the first method of how to decide a stop loss, right? I'll give you example through chart so that it's easier to understand. Okay, so I'll hide these indicators for a moment. Okay, so basically, first one is I'll hide the drawing as well. Okay. Let's say today is Friday and market is going on, right? So how to decide stop loss based on premium? Now, if you see, this is a pole and this is a flag pattern. Okay, let's say now I am bullish once it breaks above this level of 21,950 because the uh, flag will be broken and it will since it is a pole and flag, the moment flag is broken, it will again give the target equal to pole at least. So I'm bullish on market. Okay, let's say we are around 10:45, for example, right? So how would I decide my stop losses? Let's say I bought a 22,000 CE option at um, whatever X price. Okay. So how would I decide a stop loss in this case is, since this is a flag pattern, any close below the support line, which is around 21,908 or something. So the moment one single candle closes below this spot price 21,908, then I would consider that as a stop loss, right? So that is first way to do it. This is very commonly used, and especially when you're trading on chart patterns, like it could be any kind of chart pattern. So below or above any of the spot prices could act as a stop loss for you, right? So that is technique number one. Now going on to the second technique, what is the second one we are looking at? Second one is based on indicator. Okay. Now I'll quickly show. I use 9 EMA for example. Um, what I would think is, in this case, I will not use the spot price. I mean, I will not use this support or resistance as my exit point. Rather, any single candle closing below this 9 EMA would be my stop loss. In this case, I wouldn't have got a stop loss. But let's say I entered a bullish trade. I'm not looking at support. Rather, I'm believing that instead of candlestick pattern support, I'm believing the moving average as the support. This is one of the indicators. You can use any kind of indicators, be it RSI or whatever you typically use, right? You can use any of those, and then uh, candle closing below this in case of moving average. If it is RSI, let's say um, if one candle is closing with an RSI of below 60, then you will exit, right? That is based on indicator. So two commonly used ways. Now I'll explain the third one as well. It is premium based. For example, let's say I have seen the pole and flag pattern and I am bullish on market and I have bought a 22,000 CE, basically call option at rupees 100. In this case, I'm neither using spot price nor using any indicator. I'm just using the premium I have paid and stop loss based on premium. Let's say I am okay with 20% risk. In that case, what I will do is, for 100 rupees, whenever the premium is falling to 80 rupees, be it after consolidation, be it after minor fall, or whatever happens, whenever the option price falls to 80 rupees, then I will exit, simply exit. I will not look into anything else, no chart patterns, no indicator, nothing. I paid 100 rupees and I'm okay to exit at 80 rupees. That's another useful method for deciding stop loss. Fourth method is risk reward. Let's say I don't know in terms of percentage. I have, let's say, 50,000 capital, and I have bought an option of 100 rupees. So basically, let's say if an option is 100 and if the lot size is 50, so 5,000 rupees per lot I have paid, and my total capital is 50,000. That means I have bought 10 lots, correct? So 5,000 into 10 is 50,000. Irrespective of how much should the option price fall, let's say I am okay to lose only 5,000 rupees. So I have 10 lots, my investment is 50,000, and I'm okay to lose only 5,000. Now, how do we calculate this to backtrack? Per lot, I have paid 100 rupees, and 5,000 is 10% of 50,000, correct? So if I have paid 100 rupees, then 90 rupees. If whenever the price option premium price hits 90 rupees, I will exit. I hope it's clear. Very simple, right? Based on your total capital, what are you planning to risk and reward? For example, I am okay to lose 5,000 and I am playing for a target of 5,000 rupees. So in terms of per lot, the stop loss would be 90 rupees and the target would be 110 rupees. My entry point is 100 rupees. So four techniques, right? Fifth one is a slightly complicated, but again, it's used by kind of professional traders. I too use this one. For example, let's again put the moving average. In this case, I will say not just closing up below the moving average. I want to see the close below moving average also, and one proper bearish candle. Not just simply closing half candle above, half candle below, not like that. One proper candle below this moving average, then I will exit. May not be in 15 minutes chart, but on daily charts or weekly charts, such strategies are more helpful, right? So based on your strategy, that is, it should close below moving average, which is my indicator, and it should make a red candle or some kind of a negative candle. Then I would exit. So it's a mix of multiple factors, right? In that case, I would exit. So that is another stop loss. So I hope this is clear. Let me quickly uh, give you a quick review of all the types of stop losses. I'm very sure you will be using one of this, but just ensure that when to use what will be a little challenging. Maybe through some other videos or something, I will explain that to you as well. For now, five basic and mostly used techniques are: one, based on spot. So you identify either support or resistance and spot price, right? In the Nifty or Fin Nifty, Bank Nifty, anything. If it closes below a particular level, then you are exiting. That is technique one. Below a moving average, you are exiting. That is technique two. Third one is based on premium. I paid 100 rupees. I will want to exit at 80 rupees. Right. That is technique three. Fourth one is risk reward. I am playing for a reward of 10 rupees. So I am okay to lose only 10 rupees. So 1:1 risk reward ratio. So that is fourth method, and fifth method is a mixture of multiple things like below moving average and a bearish candle. Then I would exit. Right. I hope this informational video is helpful. Um, Based on what kind of trade you are taking, accordingly you should take a stop. Accordingly, you should use a stop loss technique. In this case, I am playing for a pull and flag pattern, so either a moving average or a support level would be more suitable. So sometimes what happens is you are just feeling that market is bullish, but you are not looking at any charts or any indicators. Maybe you're just looking at participants data or some kind of event or something. At that time, you should use risk reward or premium based stop losses, right? um, I'll try to make a video probably next week on how to decide target. This is how to decide stop loss, right? So I'll come up with a video on how to decide target as well, right? If you are liking this, please do like, share, and subscribe. That will motivate me to do more such informational videos directly through my experience, right? And these are not something you easily find on Google, and you would require a kind of a mentor to tell you all these things. Okay, thank you all. Have a good day.